How's it going, everybody? Welcome back to the channel. I hope you're all having a great day. My name is Gev. It's Tuesday, June 9th, so let's talk capital. Alright guys, so got a lot more exciting information to share today. We're going to go over basically top 10 stocks, see how they're performing and how they're projected to perform in the next 6 months, and we're going to talk about the overall market. Before we do that, please like and subscribe, guys. It helps the channel a lot. Leave a comment, let me know what you guys think about whatever we talk in the video. But let's jump into it. So I got another video clip, and I understand the last video clip I played from you guys yesterday, the volume wasn't as great as I wanted it to be. I'm still trying to figure out how to work that, so hopefully today's is a little bit better. But again, leave a comment, let me know if the volume is better or I need to fix something. I'm still trying to figure out how this editing video stuff goes, not my expertise. So the video basically comes because a friend sent it to me, and he said, hey, check out the last part of the video. He says some funny stuff about average investors. So we're going to jump into that, and the video perfectly ties into how the market is reacting to everything and why we are where we are. So let's go ahead and play the video, and then we'll discuss it.
And the power of Fang and Friends, which, as I've been telling you, would be some of the most consistent winners since the market bottomed in March. These high-quality tech stocks are great long-term investments, whereas I think the recovery stocks, everything from Carnival to United to Macy's to Norwegian and Delta, are more like trades that genius millennials, Gen Xers, Zoomers, and even, of course, degenerate gamblers have mastered.
All right, so what he's basically trying to say there is there's a lot of gambling going on in the market right now. I mean, I understand the buying of strong assets, like you said, Fang and Friends, and we're going to talk about that right now. But the degenerate gambling thing comes on the backs of most people finding out recently that Warren Buffett has sold out of his position in the airlines. And I think he did that last week, maybe Wednesday or Thursday or something, or it was announced last week that he did that. And basically, right after he sold out of his position, the market started to rally in the airlines pretty significantly. All right, I think it's up like 25-30% right now. But basically, what the whole joke was, oh, Warren Buffett sold the bottom, and we bought the bottom. Okay, so the problem with that is we're going against someone who is a historically great trader, right? Now, I'm not saying he's not even actually a trader, he's an investor. So he sees the potential to make money. He sees the potential for growth. He sees the potential for earnings probably better than anyone in the past 50 years, right? And not to say he's never going to be wrong, not to say he's never been wrong. He's openly admitted that he jumped on Amazon way too long, and he's still in Amazon. He actually bought Amazon where I thought it was a bad buy, just to let you know the ability that this man has. So now he's sold the airlines, and like Jim said, the millennials, the Gen Xers, average Joes stepped in and bought airlines at the bottom, and now they're telling everybody around the water cooler, telling their friends, telling their loved ones, oh my God, I made 30% in a week trading airlines while nobody's flying. That's the problem here. This market climate, to me, significantly resembles a very specific moment in time, and that's exactly when I started trading. Unfortunately, I started my trading and investment career basically beginning of 2016, and I've now been doing this for 4 years. And 2016, for whoever was involved, early 2016 to late 2017 was the historic Bitcoin cryptocurrency bubble that popped and we're still recovering from, right? If you were involved in that, you know exactly what I'm about to tell you. Nobody in that time period lost money. Simply put, the only way you lost money in crypto in 2016 to 17 was if you were short the market for some apparent reason, and that was probably because you didn't have your wits all about you. Okay, so everyone was long, everyone made a killing. I honestly can't count on both my hands how many people I know in crypto that turned $5, $6, $10,000 into $100, $200,000. And I am not making any of these numbers up, guys. People turn 5K into 135K. People turn 10K into 250K. And the problem is nobody cashed out. That's the real problem here. And the reason why this current stock market climate, to me, is screaming the same climate as it was back then is for that reason. People have gotten in heavy on markets that just don't make sense. In 2016-17, the market was rallying based on nothing. There was no development in the space. There was nothing new coming into space. Any bad news drove the market up. Good news drove it up even more. Selling pressure was non-existent. Buying was very consistent. Okay, so all of those things I just stated are basically happening in the current market right now, right? And that is not a good sign for stocks in the long term. This is why Buffett got out. He did not get out thinking stock market is going to dump in a week, 2 weeks, 3 months, or airlines are going to zero in 3 months. He did not get out based on that. He got out based on the logic that in the long term we're in trouble. And in the long term we are absolutely in trouble. Absolutely in trouble. What's the long term? Probably 2 years out, 18 months, 24 months out, we're in trouble. Short term, we're neutral to bullish. No reason to lie about it right now, right? Short term, we're neutral to bullish. And that's resembling across all markets, okay? And that's the bigger problem. Never in history have we had a bull market while we've had high unemployment. What's high unemployment? I'm considering anything over 8% high unemployment. We're currently at 13.5%. And there's no reason to believe that number is going to dramatically go down, right? However, we are about to enter a bull market. We're not that far off. I think as we sit today, we are 6% off of our highs in the S&P 500. The all-time highs were 6% off the highs. I mean, it's not that big of a move to make up at this point, right? And pretty soon we could be in a bull market. And this will be the first time we are ever in a bull market with unemployment as high as it is, right? So the numbers don't match what is going on in real life, right? S&P 500, I don't have much to show you guys here. I'm waiting for this weekly to close to see how we close. If we close red or blue, we're still seeing massive moves to the upside. I am going to show you guys 2 trend lines I'm realistically interested in here to see how the market corrects and where we correct to. Okay, obviously our first stop on any move down is 31.37. Our second stop would be this trend line here from the low to our second major low and thing. Okay, and then what I'm looking at is this trend line here to see how we hold this contact point somewhere around here. It would be around the 200-day moving average to possibly even a little bit higher. The higher the better. Basically in the S&P 500, the main thing to watch now is how high the rally goes and where the correction stops. So if the correction can stop on a higher low trajectory, so we have a low, higher low, higher low, higher low somewhere around here or even here, this is a bullish setup. If it does not stop on a higher low trajectory and we set a low, a new low below this low, okay, then we're in for some trouble, pain. At this point, I don't see that happening. A lot of things have changed since we were down here, guys. We've negated almost the entire move coming out of March. Yeah, we've entirely negated the move now, actually. The lockdown was announced in this area, and we're well above that now. So that whole entire dump has just been negated. So I'm looking for a higher low at this point, but I'm sitting the market out as far as the S&P goes until we get a higher low or a breakdown of these trend lines for us to short. Okay, now this is where the breakaway is happening. This is where the delusion in the markets are happening. Gold and the S&P 500 are not supposed to move together, and they have been. Gold is specifically not supposed to rally when the S&P 500 is rallying, and it has been. Okay, so we're seeing a major breakaway from historic trends. Okay, usually these things move in opposite directions. So if gold's going up, S&P is going down. If gold's going down, S&P is going up. We are no longer seeing this. Gold's broken out of a big time multi-year downtrend, as you guys can see here in this gray line. This is basically Bitcoin. People get mad when I compare Bitcoin to other things because for some reason Bitcoin pisses people off who are not educated enough to understand it. But major downtrend, okay? Forget the names. We're just talking market analysis. Major downtrend, multi-year downtrend. This has been in a downtrend since August of 2011, right? We broke out here in August of 2019. 8 years later, we broke out, confirmed it, went higher, reconfirmed it, went higher. So now gold is not looking to move back down to 1500, 15, whatever the hell. It's not looking to do that. Gold's trying to stabilize for a move higher to 2K. Okay, that's what gold's trying to do. And S&P 500 is trying to stabilize for a move higher too. These things are not supposed to happen together, guys. It's just not supposed to be that way. And the fact that we're seeing that is we're seeing a major breakaway from historical trend, meaning that we're in for something new, which is why so many market analysts have been wrong about where the market is heading in the short term. Okay, now let's go ahead and look at this chart that we looked at last week, which involves Facebook, Amazon, Apple, Google, Microsoft, Netflix. This is FANG. Okay, FANG and friends. The friends include PayPal, Tesla, a couple of those major companies that he was showing you guys there. But this is the FANG and friends. Okay, FANG is basically unbeatable. This is if you were looking to buy FANG here, great move, great job, great thought process. I love it. Okay, the problem with FANG is you need major money to get in most of these things, right? I mean, the good ones, the Amazon and the Google, the ones that I'm really interested in, and Microsoft, or you need a lot of money to get into Facebook and Amazon, right? I'm sorry, Amazon and Google. And those are the two main ones that I'm interested in. Major money plays. Microsoft, my third favorite, very good value buy. I tremendously effed up by not buying that one. Apple and Facebook. Apple, I've never really been a big fan of Apple. I just think they turn over the same product year after year and generate profit. It's magical what they're able to do. I'm not going to get into their company. I don't really believe in their company. Yes, I understand they do amazing things. They're an amazing company. I just do not want to invest into something that I'm not really interested by. Facebook recently has done some major things, starting a marketing thing, starting a marketplace, or trying to, that involves Facebook and Instagram. That's boosting them out big time in their numbers. So they're becoming a very solid value buy. And Netflix, we spoke about weeks ago how it broke out of a uptrend and is continuously going to move higher now, probably to that $500 level. So these are all value buys, guys. If you have money where you can play Google and Amazon, buy them on the dip, no questions asked. Okay, but the problem is most people don't. So that's why they go into airlines and start gambling money. That is complete gambling. We're almost ready for a second shutdown. I hope you guys understand. Most counties and states are seeing an uptick in the virus, so we're almost ready for a second lockdown. And that second lockdown is only going to be more detrimental for the airlines. But we're gonna have to wait and see on that one, right? Tesla has now completely almost invalidated me, which is understandable. Broke out of that downtrend we were discussing right here. Right, once this has been broken, it's pretty obvious where this wants to go. And as you guys can see, it's now moving up with big gaps, meaning Tesla's primed to make a very solid move here, right? So as that's happening, we want to see if we top out at 960, 970, and where it gives re-entry for people who are looking to long. As of right now, again, the only way you long this is a nice break above $1,000, okay? Or you wait for a correction to get back in, right? And real quick, let's not let Bitcoin stay on the sidelines. Let's discuss Bitcoin a little bit. Last time I talked about Bitcoin with you guys, I think I was talking about how the market is being severely manipulated. Most people are not going to like that either. I really don't give a shit. I'm here to tell you guys plain and simply what I see. Okay, this market is being heavily controlled by the bears right now, and the bulls are beating the shit out of the bears right now. How do I come to that conclusion? Simply put, we've never ever spent this much time in this 9K area. What are the bears doing? The bears are trying to stand their ground the last time they will ever historically be able to. If they lose this level, BTC's gone. Okay? How do we know market manipulation is happening? Right here, you see these Bart Simpson patterns, right? Google that. It's the head of Bart. If you don't know what I'm talking about, you'll figure it out very soon. Okay, Bart Simpson patterns are the textbook definition of a manipulated market. Bears are market selling BTC in large quantities to keep it from going over 10K. It's simply put. All right. So you don't see. Look, we have a bull flag. Here's your pole. There's the pole. Okay. And then you have the flag. We have a flag, right? And you see a break right here, right? And not only a break, we see a break and a push higher all the way up until almost 9,900, guys. almost 9,900. Bears see that they're losing control of the market, so they just step in and shove the market down, selling massive amounts of BTC at market price. Stupid move, because this will break higher, okay? But manipulation, right? I mean, if this was a real selling event with such massive volume, and this is what most people come in 4, 5, 6 hours later, a day or two later, and they see the volume, whatever, right? And they go, oh my God, the Bears had massive volume. I watched this live 24/7, all these markets. This volume was completely bullish until about 75% of the hourly candle was done, and the Bears stepped in and did what they did. Okay, why? It's to spoof markets. Simply put, if this was a real bearish move right here, why the hell are we going up again, right? Simply put, some of this stuff is just simply common sense, guys. It's not rocket science, right? So, that being said, next 2 to 3 weeks are important. Next 3 to 6 months are massive, okay? We need to continuously monitor markets, see where this leads, okay? We need to see how the markets break, in what direction they break, and when we can get into the markets. Okay, I was sidelined all of last week. It's looking like I'm going to be sidelined all of this week. The only thing I'm not sidelined is in Bitcoin. I've been consistently adding to my position since early 2018. I will continue to add in my position if the Bears are successfully able to push this down. And if it breaks above 10K one more time, I'm going to continuously add in over there too. And, we're going to continuously add in until we get to 20K. I will stop adding at 20K. But full transparency, I will be adding to my position on any dip here. Please dip the market. Give me a better buying opportunity. I really don't give a shit, right? I hope you guys have a great day. Please like and subscribe. And I'll see you in the next video. Thank you for watching.